Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane, and this week we're covering employer health insurance mandate letters that the IRS is sending to initiate assessing employer shared responsibility payments. But first, you can get 4 2-hour live webinars throughout the year with news and tax planning strategies to minimize your clients' taxes with a subscription to Spidell's quarterly federal tax update webinar series. Visit Spidell.com and click webinars for details. The IRS is issuing letters 226J for the 2019 tax year to employers that did not comply with Affordable Care Act reporting requirements. The IRS has not yet started issuing these letters for tax years 2020 or 2021. The IRS uses information on Forms 1094C and 1095C to determine whether an employer provided coverage as required under the ACA regulations. If these forms indicate the employer did not satisfy the requirements, the IRS assesses one of 2 possible penalties and issues Letter 226J. Letter 226J is not a bill. It's the initial proposal of the employer shared responsibility payment. Employers that have 50 or more full-time and or full-time equivalent employees for the prior calendar year are referred to as applicable large employers, and these employers have to offer health coverage that's affordable and provides minimum essential value to 95% of their full-time employees, spouses, and their children up to age 26. Coverage is affordable if the employee's required contribution is no more than 9.5% indexed annually of his or her household income for the least expensive coverage offered by the employer. For plan years beginning in 2022, that threshold is 9.61%. Applicable large employers that fail to provide required coverage are subject to the employer shared responsibility payment if at least one full-time employee receives a premium tax credit for purchasing individual coverage on a health insurance marketplace. Applicable large employers that don't provide required coverage are subject to one of 2 penalties, but not both. The penalty that's assessed depends on whether the employer offers minimum essential coverage to its employees. An applicable large employer that does not offer minimum essential coverage to at least 95% of its full-time employees and that has at least one full-time employee who receives a premium tax credit for purchasing coverage on an exchange is subject to a penalty of $2,000 multiplied by all full-time employees, but the first 30 employees are excluded from the calculation. An applicable large employer that does offer minimum essential coverage to at least 95% of its full-time employees and at least one full-time employee receives a premium tax credit for purchasing coverage on an exchange is subject to a penalty of $3,000 for each full-time employee who receives a premium tax credit. The penalty applies in situations where the employer either didn't offer coverage to that particular employee or because the coverage offered to that employee was either unaffordable or didn't provide minimum value. Both types of penalties are adjusted for inflation each year. For 2022, the $2,000 penalty amount is $2,750 per employee, and the $3,000 penalty amount is $4,120 per employee. But for the second penalty, the amount of the payment for any calendar month is capped at the number of the applicable large employer's full-time employees for the month, minus up to 30, multiplied by 1/12 of $2,000 as adjusted annually. The cap ensures that the payment for an applicable large employer that offers coverage can never exceed the payment that applicable large employer would owe if it did not offer coverage. If an employer fails the 95% test, but only 5 or fewer full-time employees are not offered coverage and 5 is greater than 5% of the employer's full-time employees, then the employer will not owe the shared responsibility penalties. You can see all of our live and on-demand webinar offerings at Spidell.com. Some upcoming topics include sale of residence A to Z, understanding the business interest limitation, research and development credits, the new Corporate Transparency Act, and many more. That's all for this week. Join us next time for another installment of Spidell's Federal Tax Minute.